Yo, welcome back, everyone. Welcome back to MTVTA. I'm your guys' host, Trent Manager, per usual. For all my returning patrons, of course, welcome. Glad to have you guys back on this Sunday. For everyone new, of course, welcome here. Really glad to have you here on this Sunday. Thank you for taking the time out of your day to come and watch this video. So, alrighty, guys, just like usual, I try to bring you guys videos when I can, especially when, there's some heated tensions, especially in the market, and there's a lot of things that need to be explained. I really wanted to hop on here today is kind of just give some backing and briefing as to, what's going on, with not only just Bitcoin, but with the overall market cycle. I'm going to be showing you guys some metrics like usual, some backing, how I'm going to back up my points as to why I believe the Bitcoin run is far from over. And this is just what we call a normal accumulation phase, or, a bearish trend for the accumulation phase. Alrighty, guys. So first off, we're gonna hop into the Fear and Greed Index. I always like to pull this up. I pull this up in my live streams quite often, and I think it's just a great measure to see how what they call new money is kind of feeling as of this sense. So we're feeling extreme fear today. Yesterday was a bit higher at 27, so it was still fearful, and then last week was a lot greedier, and then last month, of course, you guys know, was a lot more greed. So what we're seeing now is this flipping narrative, and this was last updated May 16th, so this morning. I don't know what time, but as you can see now, we're seeing some extreme fear. People are very fearful as to what's to come. People do not want to see us dip lower, and I'm gonna, of course, explain out how that is actually a very, very good thing. It kind of seems that Mr. Musk was the tipping berg of this, but actually, he might have kind of just pushed us, kind of just gave us a shove off the plank, if I'm kind of gonna put it in those terms. We were kind of already waddling on some thin ice, and I believe that he kind of just gave that final crack for us. So, alrighty, guys. So first, I'm gonna hop into the metrics as to what I'm gonna back up my points for, and then we're gonna hop into my charts, and I'm gonna give you my kind of view on the charts. But overall, first, guys, what we're really going to want to pay attention on is I bought up the minor net position exchange index. So we're going to pull up these pictures here, and I'm going to kind of just show, sorry, this is kind of just a rough drawing that I did, but so what we can see here is the kind of the slow send shift of what we've been seeing in the narrative. So usually when things are hot and the miners are doing well and there's a lot of euphoria in the market, usually miners are going to be doing that slow sell-off. You're going to want to sell high, and you're also going to buy low in the accumulation phases. When it's boring. When it's boring, that's probably a good indicator that it's probably time to start accumulating some of your positions. So as you can see, this outflow of mining has been, miner flow has been outputted slowly but surely, kind of out of, either that be to offline storage, or, their net positions have changed heavily, which means they are sending their Bitcoin away, or, they're cashing out, whatever may be. And then longer term, we can also see not only, with the green part, the minor net position change now is that when things are becoming boring and, Bitcoin's not getting that attention and that all-time high every week, and, the liquidity is falling low, we're seeing miners accumulate. So this is a good indication, that we can see that, miners are important to pay attention to, because they're the ones who, are making a lot, of this possible. And, if they're accumulating, when things are boring, that's a pretty good sign, to kind of say, hey, what's going on here? And, kind of makes you double think, like, all right, these guys probably know something I don't. The market has just been full of, just so much bad readings and, just bad news recently. People have been kind of seeing through smoke and mirrors, in the sense they haven't seen metrics like this. So, all right, we're going to move on from that. That was kind of my first one. I got a lot to back up for you guys today. I want to make you guys feel, I want you guys going into this week really, really good, feeling good about accumulating your position. So we're also going to jump into the cycle 1, 2, 3, and 4. So 1 is going to represent our 2013, and then 2 is going to represent our 20. We had a little bit of a small run in 2015, and then 2017, and then now we're going to hop into our cycle, which is the purple. So as you can see, this is the cycle that measures out our entire bull run, from each cycle. As you can tell, for the first one, there is a lot of and we've went over this a ton. So I'm not going to explain each cycle, thoroughly. But as you can see, each cycle, as you can tell, this goes from days since bottom, days since the bottom of Bitcoin. So that would be for March 12th. So on March 12th, when we had Black Tuesday and we bottomed out for the very lowest point of Bitcoin, that's where they're measuring from each one of these cycles. And as you can see, for our purple our purple market cycle, is that when we bottom out, we're following closely to the yellow, so our last cycle. And you can see that a lot of these cycles share very similar similarities. And you can tell that as to where we are right now, you can see we're in a slow, here, I can even zoom in for you guys. We're in just a slow, very boring accumulation phase, really giving a cool off. And if things look very familiar, guys, like things look super duper familiar. I'm going to leave this up here just for a look real quick, and you guys can kind of just gas hit this and kind of just seep it all in and kind of see, really where we are in that sense. And also, of course, I got some more pictures to give you guys some backing. This is our BTC chart from 2017 through our entire cycle from the 2017 cycle. This is showing us, we had many 35 plus corrections throughout this cycle, a ton, and they lasted longer, which is crazier. This is the longest and the deepest retracement that we've had, but this has been the shortest versus if you were here in 2017, this is what you experience on the regular. Like I was here I remember this. I remember this one. I remember this. I don't think I was here for these really, really early ones, but during my time, I do remember this phase. If I go back and probably look on TradingView, that was probably around, I want to say December time, maybe probably the exact same time that we had that February correction from when we peaked out at 40,000, if you guys were around, and we went down to 28K. So that was probably around that range. And this was a longer range too. If you put that in days, this looks like a month and a half, So I'm just here to give you guys these metrics and these backings to show, that the news is just kind of the last place you guys want to go. I know it's crazy. People go to the news for reliable resource, but it's not something you could do with this space, and you're just going to get a lot of mixed emotions and a lot of people speaking with emotion with no backing up or metrics. So awesome. And I'm not even done, guys. I'm really going to make you guys feel comfortable going into this week. This is the stock to flow model, and what the stock to flow model goes over particularly is the commodity assets between silver, plutonium, gold, the overall asset classes versus each other, pretty much in that sense. So the stock to flow average of 365 and also the model variance. So as we can also see, we can even go back earlier. Here we can zoom in even on the metrics even closer, and you can tell, with our stock to flow model that, we have blow off tops. That is the time where, there's so much greed and so much just, oh my gosh, money everywhere that, people are just hopping in. And there will be a time, guys, that, we are in this market cycle and everything is green. It's pretty much throwing darts at the dartboard. That's really how it was, back here. And and history doesn't always repeat itself, guys, but it rhymes pretty hard. And you can see just with the metrics that we just did, just to give you guys another feel, you can see how close and identical this follows to our last cycle. And not only that, but there are similarities between each of these cycles that have their own exact, golden rules. You see that they always carry that deep retracements. They all, vary the first one, but you can see a lot of these similarities just all over the place. So going back to our stock to flow model, you can see that we are kind of entering that orange to yellow range, but you can just see here we entered that orange to yellow range, and there's nothing wrong with having these sideways accumulations. Granted, the heating maps, that you see on here is just how the stock to flow model ratios out, and you can see the days until next halving, and you can see that we're getting into that range for the days of next halving. But you can also see that we have blow off top similarities all over the map from basically Bitcoin's exception. So this is another one I like to pull this up, and I think this is a really good one to compare, because it's the most common one that every single TA analysis guy and every single big Squawk Box, people on CNBC, that this is the most common way that people track Bitcoin's, performance in the sense of, where we are in our market cycle. Seriously, this is, if you go to any pretty much TA guy or any major channel that covers, just technical analysis, they're going to pull up the stock to flow at least probably once a week or once a month, I guarantee it. And also, guys, I got another one. This is another great one. The 200-week moving average for the heat maps. So the calculation is 200-week moving average. Heat maps equals 4% weekly of MBA squared. For all my math guys, you can do that if you want to break that down. But realistically, this is just another one I like to, give comparison to for color coordination, just for that sense. So you can see, where we are personally. We have just been touching these light green to tealish, yellow, balls, kind of on this 200-week moving average. And what that indicates, from the 200-week moving average, is the monthly increase of the 200-week moving average. So what that means is, when we talked about it plenty of times, for people who have been here quite a while, is that is the deepest retracement as to where your last asset has held. So that's kind of like that last barrier between, if you fall through 20 week, the 50 week, the 100 week, and then you break through the 200 week, that's a good indication that, hey, that we've lost some massive momentum. The RSI, relative strength index, is not holding up. Things are not it's going to be hard to get ourselves out of this pit in a way. And that doesn't also mean that if you break the 200 week moving average that you're automatically going down to the abyss. That's not true at all. This is just a fine line indicator that gives us those kind of stepping stones for us to understand where we are level over level. So as you can see here, we haven't even touched a red dot or a light orange dot at all, percentage wise, for percent monthly increase on the weekly moving average. So that means that we still have plenty of steam in the tank moving forward. That's just another great metric I like to use for the 200-week moving average, because the 200-week moving average is very, very important in the sense of understanding, how far we've come and how far we have left to go for fuel in the tank. And also, guys, last one, geez, I really wanted to bring this to you guys. I'm really excited to be talking about these metrics because they're all beautiful. Like, they all give, and if people would take the time, majority of the time, to come and look at these metrics like you guys do, they would understand that there's nothing to be fearful about, and that you guys can gauge your calculations so much better than others. So if you're sitting through this video, like, you're doing more work than 99% of people are doing in this market, and you will most likely be rewarded. I promise you that. This is a very, very big patience man game, guys. And definitely going over the Puell Multiple. This is the last one I'm gonna cover before we hop into some other charts that I wanted to go over. But the Puell Multiple kind of gives some multiplications as to market cycle tops. So market cycle tops, that means so if we go back into our December of 2018 and our 2017 cycle, you see that the Puell Multiple always crosses in to the pink band, no matter what cycle we've been in. And we have not even seen that just yet. Zero at all. We've seen consolidation, so we've kind of seen what we have right here in a way, but this simply just means that something bigger is coming, right? I mean, I would guess, right? I mean, history, like I say, guys, history rhymes, and it usually rhymes hard, and we've seen the cycle. We can go back in the videos, and you can go back and look and see, how many times we compared, history when it rhymes, and it usually comes out, on top. You guys just go back last week or 2 weeks ago, especially on my TA videos. We've been pretty solid about this type of stuff, and we've been teaching this for quite a while. We've always hopped into, a lot of these metrics. So super duper important, guys. So, this is another justification as to not fear really at all. If anything, this is some great opportunity, definitely just saying, not financial advice, but, like this I am buying the dip, just saying. So just definitely wanted to get that in there, and definitely kind of stretch that importance. So, alrighty, guys. Whew, my goodness, we kind of blowed through those, and I hope that kind of gave you guys a little bit more, kind of relief, But quickly, guys, we're gonna hop into real quick the ETH chart. I'm gonna do my little, TA breakdown because you guys really like that, and I'm glad you guys like the way I explain things, and kind of, I'm just off. I'm really the metrics, guys. I'm seriously off the history, the metrics, the math. Like, I'm not a big math guy. I'm terrible at math, but you don't need to be good at math to understand this type of stuff. You're not calculating, crunching crazy numbers. It's just simply averages and what blatantly tells you right then and there, just like we explained this entire video. So, alrighty, guys, so we're gonna hop into the E chart, and really what we're seeing now is we're actually hold on, let's hop into CoinGecko, and we kind of just see the damage that has been done. So we're seeing dominance of BTC at 39, ETH at 18. ETH has been creeping up on that dominance, and BTC has been falling, so that's why we've seen some really good price action between the two. But definitely going back to the ETH chart, I think ETH just needs a cool off, I would say, just right now. We're seeing just from its last all-time high, we're seeing this kind of downward trend that we've seen for the past, no, actually, I wouldn't even say downward. We're making higher highs. Actually, no, we're making higher lows. I'm so sorry, guys. And if we're really going to put things into it, yeah, we've seen about a 26 day of, kind of just the action that we've seen with Elon and, BTC dominance. So I would just say ETH just needs to cool off. Regardless, ETH has been very, very strong this entire market cycle. As you can just see, we've seen looking at ETH so many times, and we haven't even touched our 200-week moving average, which would be completely fine if we did. And just to give some perception on that, if we wanted to, just to kind of show you guys the real factor of it, is that we could drop another 13% and be around 3,000, and definitely have a spring up. So do something closely, something like this, I mean, easily could, and then bounce back up, or simply we could just there are so many options, especially in this cycle. It really just depends on what Bitcoin does. So going over to Bitcoin, and we kind of just see where the possibilities could be. We are looking like we're going to be testing that 200-week moving average. So to give you guys perspective on that also, simple, 17% correction, that put us down at about 38,000, 35. I know that seems scary, for those who are new and may have gotten in here, 58, shoot, even 64, that's a possibility. 61, we've been in this real upward band right here for quite a bit. This has been, let's take a look. Jeez, let's see how many days this has been. About 83 days we've been above. In a sense, we've been above. Let's try to get an exact number. We've been above 46,000. So I mean, it's been quite a while, and Bitcoin has been on a tear for those 82 days, and now it's time for that cool off. So this, guys, as you can tell, like we've gone over so many metrics and so many other things. This is a good opportunity when people are fearful and not understanding what's going on and refuse to, look at these videos and not even my videos, guys, just like be going off and doing your own research and really not just listening to what, people tell you, because I it's just, you guys already know if you've been here a while, we don't listen too much to the news. We cover it because it's important, and, you need to know what's going on, and, not only from the opposition standpoint, to strengthen your arguments, but from your standpoints, to, keep your mental state. Because this is really a big mental game, guys. It really is. It's really all what investing is, especially in cryptocurrency. Stocks are a bit different, and you guys know I do own stock still, and we're thinking about getting a stock day maybe once a week into this, so we could definitely cover that too as well. It's just, this has definitely just caught everyone by the throat, this year with everything going on. So, alrighty, guys. Realistically, that is all I had to cover for today. I hope this kind of settled you guys down, give you guys some reassurance as to, what kind of can unfold in the next, I'd say, like, next 4 to 12 weeks are going to be really good. Next 4 to 12 weeks are going to be very, very exciting. And also, guys, we haven't even had an ETF yet. By the way, that is like the one thing I've been stressing so hard, not only just with friends and family, but with like peers who have, approached me with questions, just like how can you be so nervous when, there have been multiple ETF filings in the United States and we haven't seen one, not one approved, whether that be ETH or BTC. We talk about it every week too, how Canada is literally whooping us in BTC and ETH. ETFs, and it's quite astounding, how resilient we are in a way to like refuse, like how slow we are off the bat for this type of stuff, and we're getting beat out by so many different countries in the sense of like development, acceptance, etc. So hopefully we can pick it up here soon. But other than that, guys, the real reason for this video was just continued metric reassurance, and just to show you that people don't go this far to learn these metrics and these numbers and really understand what's going on in the markets. Like, if I'm gonna post in the Patreon too, so you guys share this with friends and family, like and subscribe, share this information with people, because this is important information that I think everyone should know, because if everyone knew this information, there would be so much less concern and panic, when we see tweets from Mr. Musk or FUD of banning, cryptocurrency or this and that. And not only sorry to keep this lengthy, guys, but to even back up my point even harder in that sense, for what we saw, how the Lindy effect corresponds to, let me go back to I think it's the Puell model, or one of these models, how the Lindy effect correlates is to, like we talked about literally 3 days ago, is how, I think it's the stock to flow model with commodities, is to the longer this technology exists and thrives in this world, and the longer we continue giving it attention and adoption, and it keeps making its mark as it does, is the longer it becomes less and less likely to fail and go away. So the internet.com has made its mark for the past 15 to 20 years, and that is now integrated hardcore in our lives, and we cannot escape it. So now put that in the perspective of apply that to blockchain technology and cryptocurrency land, which is, I think, natively about only, if we're going to be real, Bitcoin has been around for about 6 to 8 years now. 12 now, I believe. 12 if we're really being real. But utilization function and really having it, core part, it's only been here for about 5 to 6. So add about 15 to 20 years on this sector, and then and put that in the scale of possibly a .com scale, and you can see why. It is very hard to ignore the Lindy effect in these metrics in the sense of adoption and moving forward. So, alrighty, guys, I'm closing out there. I'm done. I really want you guys to sleep well at night, and really wanted to go over that with you guys. But thank you guys for coming in here today and spending your time here. I hope we'll see you guys on Tuesday. But I'll bring any videos Monday that I feel are appropriate for you guys. Alrighty, guys, be safe. Bye bye.